Hey everyone, welcome back to Corporate Decoder, the place where we decode the messy world of corporate finance and secrets. And today we're diving into Keurig Dr Pepper, or KDP as they're known. And let me tell you, this filing is not about a quarterly earnings report. It's about a massive shakeup, a real game changer for the beverage giant. We're talking about a potential takeover, and a big one at that. So what exactly is this document? This is a Form 8K, a current report filed with the SEC. This basically means something significant happened and the company has to tell everyone immediately. And in this case, the big news dropped on August 24, 2025. Now, who is Keurig Dr Pepper? We all know them for their coffee makers and their wide range of drinks, from Dr Pepper to Snapple to Green Mountain Coffee. Their headquarters are in Burlington, Massachusetts. And if you invest in them, you know their stock trades on the NASDAQ under the ticker KDP. All right, let's get to the heart of it. Item 1.01 is where the real action is. This section details the entry into a material definitive agreement. And what is this agreement? It's a merger protocol. This merger protocol signed on August 24, 2025 is with JDE Peet's NV, a global coffee and beverage company. KDP is launching a tender offer to buy all of JDE Peet's ordinary shares. This means they want to buy up pretty much the entire company. The price they're offering is $31.85 per share in cash. That's a pretty hefty sum of money, and to make things even sweeter, JDE Peet's will also pay out a dividend of $0.35 per share in cash. That's a pretty hefty sum of money, and to make things even sweeter, JDE Peet's will also pay out a dividend of €26. Paid a pretty hefty sum of money, and to make things even sweeter, JDE Peet's will also pay out a dividend of €36 before the deal closes, so the shareholders get that too. This scroll tag is chosen because it's a unique company name. It is important to note that the filing might already be scrolled to this section, but it's still a good practice to include it, to clearly define the context if needed. TIV, the board of directors at JDE Peet's, they think this deal is a great move for their company. They've unanimously approved it, and they're telling their shareholders to accept the offer and vote yes for it in their upcoming meeting. KDP isn't just looking to buy a majority stake, they want 100% of JDE Peet's shares or all of their assets and operations. To achieve that, if they end up owning 95% or more of the shares after the offer, they'll start a process called statutory buyout proceedings to get the remaining shares. If they own between 80 and 95%, they plan to do something called a post-closing merger. This basically involves some complex legal steps to get the rest of the company and pay out the remaining shareholders at essentially the same offer price. Now, to make sure this deal actually happens, KDP secured what are called irrevocable undertakings. This is super important. It means major shareholders, including Acorn Holdings BV, which is linked to JAB Holding Company. These guys together own about 69% of JDE Peet's shares. They've promised to tender their shares in the offer and vote in favor of the deal. And these commitments are legally binding. So how is KDP paying for all this? They've entered into a bridge credit agreement for a whopping $16.2 billion. This is a loan that will help finance the acquisition. This is a significant amount of money, and it shows how serious KDP is about this deal. The interest rate on this loan is tied to the Euribor rate plus a margin that can range from 0.750% to 2.52 BAT-ED Euribor rate, plus a margin that can range from 0.750% to 2.5 for Euribor rate, plus a margin that can range from 0.750% to 250 Euribor rate, plus a margin that can range from 0.750% to 2.000. There's a 3% depending on KDP's credit rating. It's a 30-64 day loan, meaning it's meant to be a short-term solution, perhaps, until they secure more permanent financing. Let's move on to Regulation FD, which is all about fair disclosure to the public. On August 25th, 2025, KDP and JDE Peet's released a joint press release. This is when the public really found out about the tender offer, and something else really important. KDP also announced plans to actually split into two separate publicly traded companies after this acquisition. This is known as a separation, so they're buying a company and then splitting themselves up. It's a pretty bold strategy. To explain all this, KDP held an investor conference call the day after the press release. They presented an investor presentation to walk everyone through the offer, the separation, and what it all means. This is where they really tried to sell the story to their investors. Now, in these types of filings, companies have to include forward-looking statements. These are basically educated guesses and predictions about the future. They'll use words like anticipate, expect, believe, and plan. KDP is talking about completing the offer and separation on their anticipated timeline, but they also acknowledge the risks. There are always risks like not getting regulatory approvals, unexpected costs, and potential disruption to business relationships. The filing also tells us that a full offer memorandum will be sent out to all JDE Peet's shareholders. This document will contain all the nitty-gritty details of the offer, and shareholders are advised to read it carefully and get advice if they need it. It's worth noting that this disclosure is purely for information. It's not an invitation to buy or sell anything, and distribution might be restricted in some countries. Finally, we have the exhibits. This is where they list all the supporting documents for this report. This is the main event, the merger protocol itself, the document that lays out the terms of the deal. And here's the $16.2 billion loan agreement we talked about earlier. This confirms how they plan to fund this massive acquisition. And this is the joint press release announcing the deal to the world. This is the presentation KDP used to explain their strategy to investors quite. Now, let's talk about what this all means. KDP is making a massive bet here. They're not just buying a company, they're looking to reshape their entire business by acquiring JDE Peet's and then splitting themselves into two. This is a huge undertaking and it signals an aggressive growth strategy. One of the biggest strengths here is the sheer scale of the combined entity and the potential synergies KDP is aiming for. They're also showing a strong commitment to growth by securing such a large bridge loan and getting irrevocable undertakings from key shareholders. This tells us they have a clear plan and the backing to execute it. However, there are significant risks. First, regulatory approvals are never guaranteed, especially with a deal this big. Antitrust concerns could arise. And then there's the complexity of the separation process. Splitting a company into two is incredibly difficult and can lead to operational hiccups and unexpected costs. From a financial perspective, KDP is taking on a lot of debt with that 16.2 billion euros bridge loan. They'll need to manage this debt carefully and ensure the combined entity and the subsequent two companies can generate enough cash flow to service it. This is where the execution of the separation plan becomes critical. If they can pull it off successfully, they could unlock significant value. But if they stumble, the debt could become a real burden. Overall, KDP is making a bold move that could significantly alter the landscape of the beverage industry. They're betting big on growth and efficiency through acquisition and restructuring. Are they going to stick the landing? It remains to be seen, but it's definitely a story worth following. Alright, that's our deep dive into Keurig Dr Pepper's major acquisition and restructuring plans. What do you think about this bold strategy and KDP's future? Will they succeed in this massive undertaking? Let us know in the comments below. If you found this breakdown helpful, make sure to hit that like button and subscribe for more corporate insights. Don't forget to join our Discord community linked in the description for even more discussions. Thanks for watching and we'll see you in the next one.